If you buy things for work from your taxable income, you can lose thousands of dollars. Seriously. Hi, I'm Mr. Nuts, and this is Cocoverse. It's that one place in the metaverse where you can't work for peanuts, because in Cocoverse, peanuts don't exist. And the only reason why I exist is to help you learn all the skills you need to run an online business regardless of where you live. This is the first part of my series Business 101, a series of episodes that walk you through how normal businesses are set up correctly and operated efficiently, so that you can maximize your profit. You deserve it. It's called business administration. Yeah, the part of running a business that many people ignore. And they lose a lot of money because of it. This happens often to digital nomads, freelancers, solopreneurs, part-time consultants, and those who run a side hustle. I tell you why. Because they don't treat their efforts to earn money as a real business. I give you an example. Let's say you're a freelance designer, writer, or software developer, and you just made your first $10,000. Nice, right? Now, you want a new laptop, since you have the money. So, you go buy yourself one, worth $2,000. You go to a computer shop, pull the money from your bank account, make the payment, and you're done. But here's where things go wrong. If you don't record buying that laptop as a business expense, you're telling the tax man that you made $10,000 in profit. Which means you'll get taxed on the full 10 grand. In reality, since you need the laptop for your work, your actual profit was only $8,000. Those $2,000 went toward a legitimate business expense. So, you're paying tax on $10,000 instead of paying tax on $8,000. Depending on your tax rate, that could easily be an extra few $100s gone. Let's say your income tax is 25%. On an income of $10,000, 25% is $2,500. You're left with $7,500 after tax. But if you can deduct the cost of your laptop, that $2,000, as a business expense, your taxable income is only $8,000. And then, a 25% tax on that is only $2,000. You're left with $8,000 instead of $7,500. See the difference? You'll save $500. You'd lose $500 because you didn't care to do your books right. And the laptop is only one type of expense. Multiply that by software subscriptions, web hosting, co-working space rental, and travel to meet your client, and suddenly, you've overpaid thousands of dollars before you realize. So, what you need to understand is this. Your personal finances and business are not the same thing. Even if you're a freelancer, they're separate things. If you mix them together, your books get messy, and you can't see your real profit. This means you can't plan for taxes correctly, either. So, you'll end up paying too much. By the way, this is my little brother. Do you have something to add? Well said, thank you. Moving on. Here's how to do it right. 1. Get a separate bank account for business use only. This way, your bank statements show exactly how much money you're making. 2. Track your income and expenses separately. A simple spreadsheet will do just fine. Income minus expenses equals profit. Profit is what you want to be taxed on, not your overall income, which is called revenue. 3. Keep receipts or digital records of every business purchase. Remember to scan or take a photo, because paper receipts are not made to last for years. 4. Categorize your expenses into things like software, marketing, and so on, to know exactly where all your money goes. Then, you can optimize your expenses quite easily. At the end of the day, not doing your books properly is like working for free. You're literally throwing away some of your hard-earned money. By recording everything business-related as an expense, you save money from your after-tax baseline. So, never skip bookkeeping. You don't even have to become a chartered accountant. But you must learn to do your business administration tasks right, and thus, optimize your baseline. But what do I know? I'm just a monotonous, uninspiring AI voice trapped inside a coconut. One more thing, and this is an important part. While bookkeeping is standard practice everywhere, each country has slightly different rules about how to do it and what counts as a business expense. In many countries, you have to register a company first, and get a business license to operate it. like any other real business. Next time, I'll show what typical company types exist, so that you start counting your revenue and business expenses correctly, running a real business, and make more profit. See you soon again in Cocoverse. Now, back to bed.